Securities and Exchange Board of India, SEBI. SEBI was established in 1988 as an independent statutory body. Its primary mandate is to protect the interests of investors and promote the development of the securities market in India. SEBI has a wide range of functions, including regulating and supervising stock exchanges, intermediaries and other entities involved in the securities market. Sets rules and regulations for the issuance and trading of securities, and works to prevent fraud and malpractice in the market. It provides information and resources to help investors make informed decisions. SEBI's job is important because it helps investors feel safe. When people invest their money, they want to know that the market is fair and transparent. SEBI's regulations make sure that companies and traders act honestly. This helps investors trust the market and encourages more people to invest. Over the years, SEBI has become famous worldwide for its work. It's seen as a model regulator, showing other countries how to keep their markets in check. Its rules and actions have made the Indian securities market stronger and more reliable. In the end, SEBI's history is a story of progress. From a market filled with uncertainties to a well-regulated space, SEBI has come a long way. And as it continues to evolve and adapt, it will keep safeguarding the interests of investors and ensuring the integrity of the Indian securities market. Objectives of SEBI. SEBI is entrusted with regulating the functioning of the Indian capital market. The objectives of SEBI as a regulatory body are to monitor and regulate India's securities market to safeguard investors' interests. It aims to inculcate a safe investment environment by implementing several rules and regulations and formulating investment-related guidelines. Furthermore, one of the other main objectives was to avoid malpractices in the Indian stock market. Functions of SEBI. SEBI has the following functions. 1. Protective function. 2. Regulatory function. 3. Development function. The following functions will be discussed in detail. Protective function. The protective function implies the role that SEBI plays in protecting the investor interest and also that of other financial participants. The protective function includes the following activities. A. Prohibits insider trading. Insider trading is the act of buying or selling of the securities by the insiders of a company, which includes the directors, employees, and promoters. To prevent such trading, SEBI has barred the companies to purchase their own shares from the secondary market. B. Check price rigging. Price rigging is the act of causing unnatural fluctuations in the price of securities by either increasing or decreasing the market price of the stocks that leads to unexpected losses for the investors. SEBI maintains strict watch in order to prevent such malpractices. C. Promoting fair practices. SEBI promotes fair trade practice and works towards prohibiting fraudulent activities related to trading of securities. D. Financial education provider. SEBI educates the investors by conducting online and offline sessions that provide information related to market insights and also on money management. Regulatory function. Regulatory functions involve establishment of rules and regulations for the financial intermediaries along with corporates that helps in efficient management of the market. The following are some of the regulatory functions. A. SEBI has defined the rules and regulations and formed guidelines and code of conduct that should be followed by the corporates as well as the financial intermediaries. B. Regulating the process of taking over of a company. C. Conducting inquiries and audit of stock exchanges. D. Regulates the working of stockbrokers, merchant brokers. Developmental function. Developmental function refers to the steps taken by SEBI in order to provide the investors with a knowledge of the trading and market function. The following activities are included as part of developmental function. 1. Training of intermediaries who are a part of the security market. 2. Introduction of trading through electronic means or through the internet by the help of registered stockbrokers. 3. By making the underwriting an optional system in order to reduce cost of issue. Organizational structure of SEBI. SEBI India follows a corporate structure. It has a board of directors, senior management, department heads and several crucial departments. To be precise, the structure of SEBI comprises over 20 departments, all of which are supervised by their respective department heads, which in turn are administered by a hierarchy in general. The hierarchical structure comprises the following 9 designated officers. The chairman nominated by the Indian Union Government. 2 members belonging to the Union Finance Ministry of India. 1 member belonging to the Reserve Bank of India or RBI. Other 5 members nominated by the Union Government of India. The below-mentioned list highlights some of the most critical departments of SEBI. The Information Technology Department. The Foreign Portfolio Investors and Custodians. Office of International Affairs. National Institute of Securities Market. Investment Management Department. Commodity and Derivative Market Regulation Department. Human Resource Department. Besides these, other crucial departments take care of legal, financial, and enforcement-related affairs. Powers of SEBI. Following are the key powers of SEBI. Quasi-judicial powers. In cases of fraud and unethical practices in the securities market, SEBI India can pass judgments. The said power of SEBI facilitates transparency, accountability, and fairness in the securities market. Quasi-executive powers. SEBI can examine the book of accounts and other vital documents to identify or gather evidence against violations. If it finds one violating the regulations, the regulatory body can impose rules, pass judgments, and take legal actions against violators. Quasi-legislative powers. To protect the interest of investors, the authoritative body has been entrusted with the power to formulate pertinent rules and regulations. Such rules tend to encompass listing obligations, insider trading regulations and essential disclosure requirements. The body formulates rules and regulations to eliminate malpractices in the securities market. The Supreme Court of India and the Securities Appellate Tribunal have the upper hand when it comes to the powers and functions of SEBI. The 2 apex bodies must go through all their functions and related decisions.